All right. Today we'll be starting with stop loss, a very important topic to talk about in the Forex. We use this every day. If you want to be successful, stop loss is a must. So let's go on with it. So, what is a stop loss? A stop loss is your safety net. Stop loss is your safety net from losing money too much, right? If you don't use stop loss, it's like jumping off from a highway bridge. Yeah, Third Bridge. For those that live in Lagos, you know what Third Bridge is. For some of you Nigerians, yeah. So not using stop loss is like staying on that bridge and jumping inside the water. To show you how risky not using a stop loss is. That's what I'm trying to say there. All right. The next one is trading without a stop loss is gambling. I wrote SL there. Yeah, SL is a short term for stop loss. So trading without it is like you're just gambling. Okay, professional traders use stop loss. Don't let anybody tell you you should not use stop loss. Most people that say that are not professionals. Even the bankers use stop loss. The banks use stop loss. Okay, if you don't use stop loss, it's like you're gambling. Stop loss is our safety net, is our shield from losing too much in this market. All right, I'm going to teach you how to use a stop loss later on. Let's go on. Remove. So why exactly should you use stop loss, Mr. Creed? Why are you asking me to use stop loss? Why should I? What's the importance? I've mentioned one already. It's a safety net. Another one is if a trade goes the wrong direction or still the same thing, your stop loss will stop the order after a certain price limit has been reached. So when you set your stop loss on a trade, meaning do not, what you're trying to say is that I'm only okay with this kind of loss. I don't want to lose much. So once the trade is going against you, let's say you buy and the trade is selling, which means it's going against you. There's a limit you set on your MetaTrader 4, so you won't lose more than what you expect to lose based on what you've set for yourself. Okay. So the next one is this is one thing you can control in the market. You can set how much money you're willing to lose. Most business most business do not give you that superpower. That's what I want to say. Not most business gives you that power. Forgive me for that error. Okay. Stop loss is only one thing you can control in this market. You can't control the price movement. You can't control how you want price to move. You can't control most things. You can't. But the only one thing superpower you have in this market is to control your loss, or to specifically say, okay, this is how much I want to lose in this trade. I want to lose $1. I want to lose $2. I want to lose $10. No amount, any amount it is that you actually fine with losing. A stop loss helps you get that. So, and most business don't give you that superpower. What do I mean? If you are, if you're, if you're into any business and you lose money, most times you can't actually say, okay, this is the amount I want to lose in this business. So if this business did not go as planned, like, okay, if I start a business with 1 million naira, I plan to lose 100,000 naira. Most times it does not really fall into that 100,000 naira, or you do, it's just an estimate. Okay, but stop Forex gives you that superpower to actually see exactly 100,000 naira is what I want to lose out of my 1 million naira. So that's the advantage you have over other businesses. And stop loss makes this come into reality. So risk and money management, when you use stop loss, it helps you to manage your money or manage your risk. We're going to get to risk and money management after the advanced class. We're going to talk more about that. So stop loss placement. If you sell, you're expecting market to go down. That's if you sell. Remember we said when you're selling, you're expecting market price to go down, the value to go down. You're expecting it to go down, to go below. So your stop loss must be above if you're selling. I'm going to show you in the chart. So also if you're buying, expecting market to go up or to value to increase, your stop loss must be below. If you enter buy here, expecting it to go up, your stop loss must be below that buy. And if you enter sell, your stop loss must be above that sell you entered. All right. Okay, let's go to the chart now. Oh, I didn't open my chart up. Sorry about this. The time is ticking. The time is ticking. Okay. It's a that's sound. It's a beautiful gold I entered today. Okay. Forget all these markups you're saying, the technical analysis. Forget all these markups you're saying. Okay, but let's say you want to sell here. Or let me use let me use my demo account for this. I don't want to be paying my live money, in my real money. Let me use my demo broker. Sorry guys, I should have opened this thing before now. I was actually out. I didn't really I didn't really prepare for this class. Okay, yeah, this is my demo account. Okay, let's go to 1 hour time frame. Okay, let's use this buy now. Let's say you're expecting this market to buy. All right, you're expecting the market to buy. So if you enter your buy around this price, now I thought you had to enter around the price, or how to enter a trade. So if you press buy and you're expecting to enter around this price, your stop loss should be below it. Could be here, 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 anywhere, based on your trading analysis, which I'm going to teach you where your stop loss should actually be as an institutional trader. So your stop loss will be here, and you take your profits above. Take profit is TP. That's what we call it, TP. Take profit should be above. Should be above. It could be here, could be here, could be here, wherever it is. It's based on your strategy or technical analysis. They're going to tell you when to take your profits. Okay, you take profits in trading market. You just don't wait for it. You just don't um enter a market and expect to just keep going forever. You take your profits at a particular point. So if you take your profits, if you enter here, you enter buy here at that price. That's one. Look at your right. Look at the right. 1.1723. That's the price you enter, and take your profits around this white line here at 1.17740. So that's 61 pips, 7 pipettes. That's a lot of money. And then your stop loss will be just below it. Your stop loss is 10 pips. Can you see that your stop loss is smaller? The pips is smaller to what you're getting. So a good trading system should help you get more reward compared to your risk. So lesser risks and more rewards. So if you're selling too, for example, so we really spent a lot of time. For example, you're selling here. Let's say we enter this sell here because you're expecting market to go down. You're taking a take profit. So you will take your take profit in the direction of the sell, where your stop loss will be above the sell, right? Like we said in the presentation. So now this market is going up here. Let's enter this market. You can see this market is buying. So let's say we expect this market to buy more. So we just enter buy, because we expect it to go up. We expect it to go higher. Can you see the price we entered? That's why we have this green line here. Okay, buy at with this lot size. And we entered at around this 1.18320. That's where we entered. So where will your stop loss be? Right, your stop loss will be below it. So let's put our stop loss around here. So your stop loss will be below. It can be anywhere. It's depending on your trading system. Remember, I said I'm going to teach you how to get your stop loss. Stop loss will just be below here. So you can use this line to get your price. This cross here. Or you can also use your vertical line if you are using MetaTrader 4 on your phone. So you can see that price. That's 1.18197. So that's your stop loss price. So let's put that there. So you're saying stop loss here, not at 1.18497. Is that what we said? Let me see. 1.18197. Sorry. 197. Okay. So you model after you put that there, then you click on this one, bam, then you can see the stop loss is below it now. So if this market does not go up above this one, but start coming down below you, this is where, and it hits your stop loss, it's going to take you out. So you're going to be losing some money if it goes against you and hits your stop loss. So this stop loss saves you from losing too much. Imagine if you not put any stop loss. See, you are in profit. You are making $1 right now. Okay, it's down again to 80 cents. It's going above it, above this price. That's why we're making money. If it goes below the price or it's going against us, it's selling and it hits your stop loss, it will take you out. Okay, it's going to take you out if you hit your stop loss. Then you've lost money. Okay, but if you don't put stop loss, what if it just keeps going down, going down? It's going to take all of the money. So that's why we use stop loss as our safety net. All right. So the same thing too for sell. Let's look for what we can sell. Okay, this price is going down, and then we expect it to sell. What will we do? We expect it to go down. What will we do? I'm going to teach you how to enter all these trades in the last class. So calm down. So you're going to enter sell, right? So we entered sell. What will your stop loss be? Above. See, your stop loss is above here. Stop loss is above here. So that's 1.29752. Then you come modify it. 1.29752. You can see that our stop loss is there. So we're expecting the market to go down. If it doesn't go down, it means we are losing money. If it goes against us and hit our stop loss, you've lost money. So your stop loss saves you from losing too much. What if this market just keep going up? It means you're losing money, all right? All right. So that's stop loss for you. Let's try close. Okay, don't worry, let's just go. It's a demo account. So the next one is the three types of analysis. So what's really analysis? Analysis is what you expect, like when you enter your chart, what you expect the price to do, what you expect your peer to do. You have to first look at it and okay, see, I expect or anticipate this price to go up or down. So that's what we call the analysis. So you analyze your chart or your peer or the market. So the first analysis we have is a technical analysis. This type of analysis is used by traders to study price movements. Okay, and traders use study historical price movements in order to determine where price could go. So historical price movements, what do I mean? I mean you go back to maybe yesterday, day before yesterday, or last week, or last month, last year, to see what price I'm doing, and you can determine what price will go based on that. So there are also traders that use tools like the support and resistance. And now I taught you support and resistance, indicators. I taught you indicators also. And I didn't teach you indicators. We don't use indicators. Sorry. Oh, sorry. We don't use indicators at all. Okay, it's the retail traders that use that. So people that use indicators are also analysts and also price patterns. Okay. So you see that chart I opened that time that was showing a lot of jaga, order block and all those things. Those are technical analysis. So we do technical analysis in institutional traders. I'm going to teach you how to analyze your markets technically. So there's also the fundamental analysis. This type of analysis includes political, social, that political should be comma, political, social, and economical news to gauge how the market will do along with a country economical outlook. So fundamental analysis mostly traders they analyze the market by checking the news. And I'm going to show you the websites to check news. So they check the news to see what the market could do or is going to do based on what they are saying on the news. All right, I'm going to show you the website for that, how they check the news, or how they know the news. So they check the news for a currency pair or for a currency itself, and then they get their analysis from what that currency is telling them of based on the news. Yeah. So if a certain country does well, then their currency should do well or increase in value. So fundamental analysts also believe that if a country is doing well, let's say USA, the economy is good, everything is going fine, so they expect their currency value to also go up. All right. and also vice versa. If the country is not going well, expect the currency value to reduce. So let's go to the website. Let me show you what all this news are all about. We do not do fundamental analysis, okay? But we check them once in a while too. So we check the we check the news once in a while to know what is going on based on economy. I'm going to teach you how to do it in advance. So first one we have is the forex.com. I opened this website today and it's telling me all these technical problems. But yesterday it was showing just fine. So we use forex.com to find out news. All right, news for a particular country currency. So since it's not showing us the website, let me just go to this picture here and show you how it will look when you enter the website. So it shows you the dates, it shows you time, the currency, the impact, detail, actual forecast, all these things. I don't. This is those that trade fundamental analysis. This is what they use. They use all these details to get to predict where the market will go to. I don't focus on all these things. Okay. I don't need all those things. You don't need those things to make money, really. Some people do well with it. Sure. So the date is, it don't show you the date. This date was October 9, and these are the times. Yeah. So you have to change your own time to Nigeria GMT. When the website opens, you come here, you change it to GMT plus one. That's Nigerian time. So what are all these? You can see showing the time, it's showing the currency, GDP, that's Great State Pound, it's showing JPY, that's Japanese yen, it's Chinese yuan, CNY, Chinese, Euro, US dollar, Canadian dollar, Euro again, blah blah blah, like that. New Zealand dollar and Canadian dollar again. Okay. So the impact we're having, you can see there's a yellow, there's yellow. What do they mean? Impact, when you see a yellow file or a yellow this thing on forexfactory.com, what is telling you is that GDP at this time has impact on the market, but it's of low impact. It's not going to cause much volatility. It's not going to cause much chaos in the market. Like, market is not going to really push. The candlesticks will not be that big. The candlestick will be just a small or just medium size. So there's not going to be volatility or liquidity around this time with GDP currency. Okay. Please mute your mic. Everybody, please mute your mic. And that's the same thing for this one too at this time. So the Chinese yuan is a red file. What it means is there's high impact around this time. So there's high probability that the Chinese yuan will be moving rapidly or crazily. Could be going up and down, up and down, up and down. If it's going up, it just go very fast. The candlesticks will be massive. So that's volatility. So at this time, you should watch out for Chinese yuan because there's a high impact and chaos could happen around any pair that has this Chinese yuan. It could move rapidly. So, and around 3 a.m. it's not low impact, and then this one euro tentative. This tentative, it's they're not sure about the time yet, so they just say tentative. And around this time, just watch out for euro low impact. A German Buba monthly report. So this one now, this USD 1 p.m. You can see the fair share Powell speaks. So fundamental traders, when they see something like this, fair share Powell speaks, is it's like saying the president is speaking, or it's a very important news though. It's a very important news. So this could cause USD pair, any pair that has USD with it, it could cause it to move rapidly. And you can see this is high impact, meaning it has very crazy impact on the market as at this time, right? Just like the Chinese yuan. Next one is Canadian. So when you see low impact, you should not really bother because market will still move like it always does, right? But we do not fear news though. Although we do not trade new non-farm period as based on my trading system. My method didn't teach me to trade non-farm period because it's not nice to trade, and that one happens every first Friday of every month from 12 p.m. So that's the only news I am actually kind of scared of because it's like 50-50, and I don't do 50-50. 50-50 is like gambling. and I don't gamble. I do at least 80-20 in the Forex markets. All right. So the Canadian is low impact. At this time, it may not move much. This one. So you want to watch out for when they say president speaks. This is a semi impact, meaning it's not that rapid. It could not do much. But when you see President Lagarde speak, President of ECB, the fundamental traders use this to predict where price will go based on um, this president's speech. Okay, so they believe that maybe this euro will go up or it will go down based on this president's speech. That's the way they do it. I don't really know. So that's it for Forex Factory. The next one is what is this thing saying? The next one is Bloomberg. I don't know how to use Bloomberg because I mean I've never used Bloomberg before. Bloomberg.com. I never used Bloomberg before, so I don't know whether they put their news. But you also use Bloomberg to find news. And the other one I use again is the investing.com. Investing.com. So this is how you find the news. You come to this economic calendar. Okay, so you click on economic calendar and oh, I didn't change my GMT. So that's GMT plus one. Lagos, you can see Lagos GMT plus one. It's taking time to move. Okay. So you can see it's showing you today, it's showing you yesterday. Same thing too with Forex Factory. It's not just opening. It can show you tomorrow news. It can show you this week news. It can show you even next week news. Okay. So these are the news for today. Let me take this out. These are the news for today. So when you see two star is semi-impact, just like the Forex Factory. Forex Factory is orange. It's going to show you orange file. This one is semi-impact. This is high impact. This is semi-impact, high impact. As at this time, semi-impact, high impact, semi-impact, high impact. So these are the currency pairs, and this is what are happening. So when you see a governor want to speak on AUD as a semi-impact, the fundamental traders use this and say, okay, think price is going to go up or price is going to come down based on the governor speaking. They believe there will be more volatile and price will move crazily at this time with AUD. So any pair that has AUD, you should watch out for that at that time. So right now, this is 628. What price is available? Okay, you can see this. This is the time we are now, around this time, around 6. So there's a news on USD, blah blah, is a low impact. There's this one, this one too, semi-impact. The next one is at this time, that's 9:30, semi-impact again, and then Korean currency. So that's how they use that's how to find your news. We're still going to talk more about news, or once in a while, I'll chip in something about news in the advanced class. Oh, okay, so these are the websites here. So sentimental analysis. Sentimental analysis. This analysis, I do not know if this analysis is actually real, but I believe some people still trade this kind of analysis. I don't like it, okay, because it's like gamble to me. So, sentiment analysis is the overall feeling of the market. Like if you feel the market is going to go up, or you have a feeling the market is going to go down, you enter your trade. So that's how they analyze the market. It's not as important to understand every detail of the news, but more important to gauge how people are responding to the news and how that shows in the market. So, for example, if you have earthquake, so if there's earthquake in China, you expect they expect a Chinese yuan to drop. They expect it to drop in value. Also, if there's a nation election like the US election that's coming up in November now, some people will trade based on their feeling, how they believe the US dollar is going to go based on their feeling on who is going to win the presidency. Right? The next one is coronavirus. When coronavirus was uh, was out there, people had feeling that okay, some metals like gold, something is going to affect gold. Gold is going to drop, or gold is going to increase, or silver is going to drop, or oil is going to increase. They know they trade all those things. You can trade gold, you can trade silver, you can trade oil, you can trade all those things. Yeah. So people, when coronavirus was out there, they were believing it's going to gold is going to maybe gold is going to fall or it's going to increase based on how they feel. That's how they trade all these things. So I don't really like these guys. It's more like gamble to me. I prefer my technical analysis. It shows me exactly what I should look for and it has higher probabilities. Okay, so that's the end for today's class, stop loss and a three type of analysis. So unmute your mic and ask me your questions. Let's get to it. Unmute your mic, please. Let's talk. Any question? Any question? Any question? Okay, so in the absence of no question, I'm going to end today's class. I'm going to send the recording to the channel. Thank you very much. Bye for now. Have a good night rest.